Hey, Saretsky here. Welcome back to the show. I want to put this video together to explain why you can't afford a home, why your kids can't afford a home, because I think there's a lot of misconceptions out there. And I want to walk you through, again, my view. I'm going to back this up with data and everything that is going on. And so it's funny because we had this, you have to start off and talk about inflation, central bank policy, government manipulation of currencies. And this really is what plays into the core thesis. And I'm going to highlight all of the distractions that people are simply missing. And so you have to look first and foremost at the Canada's CPI inflation. So in the month of May, we had this surprise headline inflation jumped higher than expected. And so markets kind of freaked out a little bit. But it's funny, right? Because the reason why it actually jumped higher than expected was because Stats Canada decided to make an adjustment to the CPI basket. They said, we're going to change the CPI basket this month. And what they did is they took the mortgage interest component and they increased it from 3.5% of the CPI basket to 5.2% of the CPI basket. Now, why would they do this? Why would they do this? Again, you can start setting your conspiracy theories about why they would do that, but I think it's pretty straightforward. What they're basically going to do is that mortgage interest component, we're entering into a Bank of Canada rate cutting cycle, and we're also entering into base effects, right? So like your mortgage interest component is no longer going to be going up 30% a year, for example, because rates have stopped going up. In fact, Bank of Canada is now cutting rates, so they control that component. So basically, if you look at headline inflation, it was 2.9%. But 1.3% of that was simply mortgage interest. If you were to back that out and just remove it, headline inflation was 1.6%. Now, again, I'm saying this because, yes, we all know inflation is running higher than 2.9%. We know price levels have jumped dramatically. But why would they change the CPI basket? Again, it is because we're going into this rate cutting cycle. This is going to put further downwards pressure on inflation in the months ahead. Again, as you get into the rate cutting cycle and as the base effects work their way out of the system, this will put more downwards pressure on inflation. And again, we know that CPI inflation, the basket has been manipulated for years and years and years and years. Again, this is really no surprise. In fact, our former Prime Minister, Stephen Harper, had admitted so in an interview back in early 2021 when inflation was just starting to take off. So let's clip to that video right here.
I just saw the consumer inflation here hit 5%, and that's with all kinds of changes to keep the number down.
Of course.
All kinds of statistical changes to try and keep the number down. But that's only consumer inflation. My own view is that we've had inflation for some time now. It's been asset inflation. It's bubbles in everything. And now you're getting consumer inflation.
So again, we know that the CPI basket's manipulated, right? Keep in mind that pre-pandemic, we had basically a 10-year plus period of zero interest rate policy. And they said, well, interest rates need to remain at zero because inflation is just barely under 2%. We're just barely below our target. We can't quite hit that target. Meanwhile, we had massive asset inflation, which ultimately showed up in things like stocks, and particularly here in Canada, it showed up in our housing market. So, but again, the CPI basket was under 2%, but we actually, in reality, for most people's lives, we actually did have massive inflation, and it really showed up in hard assets such as real estate. And I'm going to come back to that whole point moving forward. But what do governments do? Governments that create the policy for the manipulation and the creation of inflation, they look for distractions. They look for political talking points, people that they can point a finger and blame. Other than themselves, they'll blame everybody else. And so I just look at all the housing policies that we've created over the last 8 years, right? We know that we've gone this rapid, massive housing inflation over the last 8 years. And so look at all the policies that they've brought in over the last 8 years. So I'm, again, here in Vancouver, so a lot of this applies to here in Vancouver and in BC. In 2016, we brought in a foreign buyer's tax. In 2017, we brought in a Vancouver empty homes tax. In 2018, we brought in a BC government speculation tax. In 2018, we brought in a BC school tax, which is basically a tax on luxury homes every single year. We brought in an increase. We increased the foreign buyers tax again in 2018. We increased property transfer taxes on luxury homes in 2018. We introduced a mortgage stress test in 2018. We then increased the homes tax again in 2021. We then created the federal underutilized housing tax in 2022. We created a federal foreign buyer ban in 2023. We created the Airbnb ban in 2024. We created the flipping tax, the BC flipping tax in 2024. And we've now increased the capital gains inclusion rates in 2024. And again, I would implore you to ask yourselves, has it gotten any more affordable over the last 8 years, despite all of the taxes and regulations that have been aimed at the housing market? Nothing has made it more affordable. What it has done is it killed and it choked the living lights out of the luxury housing market. So yes, it killed that luxury high-end bid, particularly coming in from the offshore Chinese market. It killed that bid, but it didn't create any more affordability for the common man. What it did is it actually, housing affordability is the worst. It's the worst that it's been going back to the 1980s. But what it did kill is it killed the luxury market. All you have to do is look at detached home prices on the west side of Vancouver, where there was a concentration of high-end homes and foreign money that has entered that market. It peaked in 2006. 8 years later, it has gone nowhere. It's still below those levels. You know, you go to West Vancouver detached properties, again, peaked in 2016 and is still below that level in 2018. But so the $4 million homes have gotten more affordable, but all of your entry-level product has not gotten any better. Your rental market has not gotten any better. And so it hasn't created, but again, it's created the illusion that governments are working towards a solution. But in reality, the bigger picture is this ongoing currency debasement that we have, governments running massive deficit spending, hiding the rates of inflation through manipulated CPI baskets, importing rampant population growth certainly hasn't helped. Canada's added 2.8 million people over the last 3 years. That's more than the entire provinces of Saskatchewan and Manitoba combined. We added Saskatchewan and Manitoba's entire population in the last 3 years. We've been chronically underbuilding to support that number of people coming in. So that's really what is driving this asset inflation and your inability to buy housing. In fact, when you look at it, and again, I really have to emphasize this chart, keep in mind that during the COVID pandemic, we printed basically 40% of all Canadian dollars that were ever created that were in existence. Over 40% of Canadian dollars that were in existence were printed during the pandemic. They were added to the overall monetary supply. So you have more dollars, more loonies chasing scarce hard assets such as housing. You can imagine what's happening. And so I always say, how do we measure this? And the clearest way I can show this is in Vancouver home prices priced and denominated in ounces of gold. Because at the end of the day, for thousands of years, all we know is that every fiat currency has always gone to zero, and that gold has historically always bought a fine man's suit. And we can see that today, an ounce of gold, $2,400 an ounce, USD, buys a fine man's suit. And that holds true today. So if you look at Vancouver home prices priced in ounces of gold, again, it's gone down. It's been trending lower for several decades. So housing has gotten actually more affordable in ounces of gold. The reality is, of course, is that most people don't get paid in ounces of gold. You get paid in a fiat currency. And so you've had, again, this inflation that has been masked through a manipulated CPI basket, as it doesn't factor in home price in that basket. And again, you can see that devaluation. So I always like to point this up because I think it's interesting to see all the revolt and all the angst around housing and policy, and the solution from the vast majority of every single Canadian and the people that comment here on the YouTube comments below is always we need a new tax. We need a new tax in Canada. We need a new tax to create affordability. I can't own a home, so you shouldn't be able to own a home. You definitely shouldn't be able to have a second home because you worked hard and produced, some economic value and worked hard to save money, and you were able to buy a second home. You shouldn't be able to do that because I can't do that. We must create a tax. We must create a tax to create larger government to then somehow redistribute the wealth, and that will make my housing more affordable. But again, as I just pointed to the long list of taxes and bans that we have brought in since over the last 8 years have failed to produce any material improvement in affordability, and in fact have actually exacerbated the problem. And so this is really what I like to emphasize, is just taking that approach and understanding the bigger picture. Is that I think people are being fooled into thinking that another tax is going to suddenly create more housing affordability. In fact, we're just seeing more and more taxes feeding the bureaucracy, which is actually delaying the ability and preventing the ability to create new housing. And the lack of productivity in the economy, if everybody continues to grow and feed into the private sector and everybody just works for the government, you don't actually produce anything. And so you get basically falling productivity, falling living standards as you ramp up. Rampant population growth just exacerbates the downward trend in living standards. And that's really what we've been living through. And so if you feel worse off over the last several years, it's because, again, real GDP on a per capita basis has gone nowhere. It has been falling, in fact, over the last 5 years. And so this is the reality, is that we've had this ongoing currency debasement through monetary policy, through the fiscal policy side, through the rampant immigration growth, and the lack and inability to build that housing, which is predominantly blocked through government regulation, zoning policy. You think about how long it takes to get new housing built today, it really feeds back into that big picture that I have. So that's really what I'm seeing in the marketplace today. That's really how I frame up this whole conversation. And again, I always like to emphasize this. When I always laugh when I see things like, increasing capital gains inclusion rates coming here in 2024, as if that's going to create any sort of meaningful affordability for people moving forward. I actually think what it's going to do, again, is reduce new housing construction by increasing your capital gains inclusion rates. It increases the hurdle rate for investors that are looking for a return on new housing, right? Because if you're going to build new housing, you require investment dollars to build that housing. And so the investors that are deploying capital into the project, if they now have to earn a higher rate of return to offset the risk, you're just less likely to invest in the housing. And I'm not just talking about pre-sale investors. I'm talking about limited partners that invest from before a shovel ever hits the ground. A developer will go there and have equity partners, capital partners in the deal that have to invest in these projects. And so long story short is why you can't afford housing. Again, I would love to hear your comments, thoughts. I'm sure there's going to be a whole bunch of rage in the comment section below. Yes, we know it is a combination, is a factor, not to dismiss that foreign buyers, offshore capital have not played a role, that we haven't had more speculation in the housing market, that has become more of a commodity of sorts than actual shelter. It's become more of an asset class than it has of shelter. Sure, those are all components, but I think those are components of shelter becomes more of an asset when you start debasing your currency, because people look for alternative ways to preserve their hard-earned working capital that they earn via incomes in order to shelter that from inflation, which, again, we've clearly had massive asset inflation over the last several decades. You look for alternatives to get it, to protect it from that debasement. And that is really ultimately just a result of government policy. So, as always, hope that helped. I'll see you next week.